Well, good evening. I'm Epstein with your SPDR-ETF stock market wrap-up. And this wrap-up is for an all-important Wednesday, the 21st of February, 2024. Wow. So we had the FOMC minutes. They're out of the way, thank God. But the big event today was certainly NVIDIA. And instead of me going through all the numbers, let's just say it was a beat in all the categories, but not a beat to the blowout in creating a melt-up in the market. You've been a bit of everywhere. I can tell you right now that while the market closed here at 670, 472, the latest quote's around 735, up about 8%. It's not a 20% gain, 25% gain. It's not equivalent to the drop that you had in Palo Alto as an example, down nearly 30%. It's tamer tonight. And we need that tameness. Many analysts are talking maybe it gets to 800, 850 on this particular run in the market. Okay, but from 735, that's a $90 move. So it's another 10, 15%. People are going to wonder, is it worth coming in? To get to 800 might be a 5% move. So they either broaden out and they move to AMD, Intel, other markets, or people just say, you know something, wait a second here. In looking at those Fed minutes, the Fed is certainly not making any move in March, and now even a move in May seems to be off the table. Right now, the odds are favoring a June, possibly July timeframe. And I keep saying it's going to push back. I have been by myself here for a year saying this, that I don't see the need and why the Fed would cut interest rates at this point. They need to see the data at least turn the corner and stay turned. The easy money's out of the way. We saw that. We went from 9% to the 3%, 3.5% range. Now it's the hard work. You have to get the unemployment more towards 4%. You need to see the unemployment claims. And talking about that, you tomorrow morning get at 7:30 jobless claims. I called them unemployment claims, jobless claims. The last report was up 4,000 at 216. You want to see this number jump. If it jumps, the Fed will get a smile on its face. Maybe that then starts working its way into the fact that the jobs reports won't be as strong as they had been. We get the Chicago Federal Reserve National Activity Index at 7:30. S&P Global Group is going to give us the service sector and the manufacturing PMIs. They'll come out at 8:45, and we get the home sales data, which should be terrible, given how high interest rates have been going, at 9. You know, could there be a delay in the data? Sure, because this is for January, so December rates didn't move as fast as they moved in January, but they moved up from then till now. Let's face it, mortgages are at 7.06%. Before I get too far and ahead of myself, remember, tomorrow, that is Thursday, I will open up the live webinar 12:15 p.m. Central Time. I begin the webinar at 12:30. I end about 20 minutes later. I realize many of you have other engagements that you do. I appreciate when you attend, but that's why we keep these short and to the point. And I ask so often of you, give me your questions ahead of time so I can create the charts and spiders and that. I've done them already, so we've got quite a few of them. You can call my staff if you didn't get an invite, or better yet, just move your cursor up to the top. There you'll see an icon. Give it a click. You can sign up that way. You'll receive an email with your user ID and your password. Don't even try to write me after 12 o'clock Central Time with questions. I'm going to be too busy setting up the webinar, so it's either got to be tonight or it isn't going to be for you. Okay. So let's go back to where we're at here, and let's get back to the charts. That's where I want to be. Okay. So coming in, you can see ARC down a little bit again. AMC, I think the $4 range is going to be an interesting number in that market. Autos. So we saw Rivian, Lucid get smashed. I mean smashed. I still question the purpose. If the Saudis weren't there for Lucid, would it even be able to survive? It's a high-end car that unfortunately just hasn't caught on. I mean, how do you survive as a company making 9,000 cars a year? And this isn't its first year in business. I've been in a Lucid. I think they're a fabulous automobile, very futuristic, but The one I was in was, what, $140,000 or so. And it didn't drive in it. I sat in the car in the showroom, and I was blown away by the beauty of it, but don't know what it's like. I understand the monster, the horsepower is insanity. However, there's still the problem of these cars being so expensive. Now, GM got lucky. They are getting back the tax break on their Lyric, and they've resourced so that they meet the federal standards now to get back that break. I read that late in the day. Rivian not meeting its numbers, even with its truck sales and all. So the stock was down pretty good in the aftermarket. You can see you were a mixed bag in most of the indices today. It's interesting that you were down in QQQ and NVIDIA, and obviously the pop tonight's going to get those markets playing games with what they're doing. I had told traders I'm still bearish in the bonds and the notes, but I said trying to go into the combination of the FOMC minutes and NVIDIA, I said, I'll live to play another day. Amazon getting the pop that I've wanted to see. I told traders that I liked that market a lot. It was closer into the 160, 166 area that we were talking in the morning video. And it worked out to be a nice trade. And I didn't realize they were going to replace that. In other words, move Amazon in over Walgreens. Didn't even know it, but the chart action was just good. In the metal markets, pretty much sideways action. So let's get to the chart. And I'm sorry that I've got that arrow there. It's going to be there all the time. So I apologize, but otherwise I got to re-record and I don't have the time to do it. As you can see, a nice breakdown in the market through here. Now, we've got the pattern of a higher high and a lower low. Where did the market stop? How often do you hear me say this 18-day moving average of closes? That is the key. It's often, I call it the line in the sand, because it's from there that if you get a break, the market often will go to it. If you get a big break in your rally, you'll fight a battle often at it and try to decide where you're going to go from that number. So you see this over and over on the patterns. You've got a distribution top of sorts in the market here, and I know we're at 735 tonight. The question is, can it poke through those and get over and close over that 744 area to prove that there's another leg possibly to the upside? That's what the market has to prove here. You've lost the bullish embedded momentum. Unless you're sharply higher tomorrow, and I don't think that 8% is enough to do it, that would turn these numbers. But when they both turn together under 80, I don't recall seeing where they turn back up the next day. So momentum is lost, and momentum is often the first sign that something inside of the market is changing. I wish I could tell you more than that, but that's what I've learned, and it keeps me wary of putting new money in. And plus, this chart pattern's not saying put new money to work. By the way, I had told clients today, I said, and I said this morning in my subscriber video, I said, if in the unlikely spot you got down to that lower Bollinger Band, that's where I thought the pros would buy the market. Never got there, okay? You missed it by $65, $63. Okay. That's not that much in this stock. Remember, it's up tonight 50, so don't think of that was that far. Lift. After being over the Bollinger Band, you pull back in. Okay, but I still think this is a base. So until this is taken out in here, I think pullbacks in the market start looking more and more interesting. The market's working off an overbought condition. In the gasoline fund, this is just what I was looking for. When the market would pull back, now the battleground starts for direction. You've got the trend down, but you have the bias up as you're over the 18-week average. We're going to get in the morning at 9:30 the EIA stock numbers, so be aware of those. But I'm looking for the support in between 65.35 to 6,300. It doesn't have to get down there, but that's where I'm seeing support. So instead of being bearish, I'm getting more bullish. When we look at XLF, all right, you've got higher lows, higher highs. Are you going to embed? Well, you're overbought. You haven't begun doing that yet. XLI, this was a stock I didn't want to see make a new low on the day. Today it did, and it had a reversal day, so I was wrong. Until today's low is taken out, this chart is still saying it can get to the 119.48 level unless you lose the embedded reading. So I was looking at that one today and got too cute. AMC, this is why I'm looking at that it's 431 level. Wouldn't surprise me if you go there to do some testing. Now remember, March 1st, Dune comes out. It's due to be a blockbuster, so the question is, on this break, does the market find support? And does Dune turn out to be the blockbuster, or like so often they predict one and it doesn't happen? The reviews seem very good, the people that have screened it already. RSPD, lower highs, down to the 18-day average. Market is fighting for direction right here. Is the consumer alive or not? If your market can clear these highs right here, it says he is. But you have a market that was overbought. It's worked it off. Now the question is, what next? I don't think the FOMC minutes did any help to this market, yet it was up 26 cents. But I was looking at it because it's going, you're going to stay restrictive for a long time. In the home builders, no surprise here. Pulte carried the day. However, interest rates are going to be this market's problem, and the support is no supply. So the people that want to go out and spend $1 million like they do on Pulte homes and up, well, where are they going? Okay, there's not enough supply out there, so there's a backlog for that type of person. I gave a whole thing on that today. I was asked a question on Australia. I said, you get a condo or a small house for $300,000-$400,000 and under, there's really good demand for those. Over the million, the people that have the money, they have the money. It's that in-between that's a rough area in American dollars. It varies all over the world, obviously. In the energy sector, it's hard not to be bullish. I mean, I don't see anything good happening in the Red Sea other than a ship is just drifting that was abandoned, taking on water. They claim it'll sink. Who knows? The Houthis, let me say it right, the Houthis, they are still as active as they have been. Israel has quieted from what I can see. I'm not seeing all the mass killings that we have seen at this point. I think they're giving peace a chance if all the negotiators can get the sides together, while Israel will say, no, no, no. A lot of that is for, as you know, the showmanship. But if Hamas is thinking they're getting 1,500 prisoners released, I think it's a dream that they're looking for, and Israel to pull out, and the war to be over, and they're staying in power. Anything can happen within degrees. I don't know, but it's going to take an awful lot to make that happen. When I see GLD, still looks good to me, all right? This correction ran its course. Now the question is, can it get bullish from here? You can't argue the fact that we still have sticky inflation. You do have the fact, though, that the Fed wants to stay stronger and higher for longer. If you read those minutes, they need to see the data break, and it hasn't broken, and that works against gold. But once it starts down, the inflation, if the Fed eases, that might give this market the boost that it wants. In the silver market, you've really gone from the lower band to the upper band in sideways action. You ended a decline, and that's about it. And in the copper market, everybody's waiting to see what China pulls out of its hat. People forget, but when they did, I think it's their last Congress meeting, they said that they'd make announcements in March. People forget that. I'm waiting to see what announcements are forthcoming. We've seen small things so far, things like, are you aware? Big brokerage firms, they put the rule out. You cannot sell on the open or the close. So I've told you, short selling not allowed. Now I've told you can't sell on the open or the close. If you're a big brokerage firm and you have a client with a lot of position, you got to get approval to have some of that position sold. So all it can do is go up because you have no sellers. Okay, so I can see why copper might get a bit off of that. It's funny. If you honestly think putting money there makes sense, I don't get it. BND is still bearish. No sign yet it's over. You got to lose that embedded reading to convince me of otherwise. Targeting still 71.51 to 71.33. The dollar index is going to be a key test, 27.98. That's your 18-day average. If you get under that, you could have problems, and you lost your embedded reading. When that happened, I said, I thought you'd make your run to that number. You're pretty close to it. And the opposite, you're over in FXE, you're in an uptrend. Will you make a run at 146? It would be a surprise to me, because I would have thought the dollar would be stronger rather than weaker given all that we've seen with the economy strength and the Fed. But I don't fight the charts, and the charts right here are saying you don't want to be short in the euro on the FXE. The futures, same thing at this point. So interesting part that is going on there. Again, I hope to see you all at the webinar. Remember to move your cursor to the top here if you want to join. If you haven't received an invite, there'll be no more invites sent out by us, so you have to do it this way. I'll see you tomorrow.